What's going on, guys? Philip at Trade Genius. All right, Bitcoin's taking quite a tumble. So I wanted to first start off with a big picture outlook, take a look at the trajectory that we're on. We'll look at some longer levels here at the Fib multiplier. We'll look at how we compare to the last cycle. We'll take a look at the futures chart. I want to talk about the gaps now that this lower gap is closed. Then, as usual, we'll take a look at the weekly and daily levels on Bitcoin. I want to talk about that a little bit more in detail here. Also take a look at our heat map because I want to show you something there as far as how the delta is reading. And since we're getting into these levels, I also want to take a look at the monthly VWAP levels because those are important to know as well. And we'll take a look at the crypto fear and greed and see about the level that we just printed. Guys, we do have some specials running. If you are interested in our indicator, that's the Moneymaker. You can click on that, and you can also use the promo code for 40% off using the promo code FALL. We also have our bundles, which can get you into the room with us. We've had another great profitable week in the room as well. If we look in the indicator software, this is a lot of the alts are setting up nicely on the 15-minute chart. So our indicator package will get you the slingshot indicator and the Moneymaker, which is our flagship indicator. And guys are doing this daily on the 15-minute and stacking those sats. So I encourage you guys to check that out. All right, guys, let's dive into this video. Got a lot to talk about.
Trade Genius.
All right, guys, big picture stuff. So again, we're approaching halving, right? And when we're approaching the halving, very, very bullish price action ensues. So what we saw here was actually, we're going to look at some of the pullback percentages on this chart. But first, I wanted to show you that we've pulled back to the 50-period weekly moving average. And when we come out of a bear cycle and we break through the 50-period moving average, pulling back to it is actually fairly normal. If we come out of this one here, you'll see actually we touched it a couple of times. And when we came back way back in the 2011-2012 cycle, broke out of it, pulled back to it, hugged it for a while, and then as we approached the halving, started to move up. Different thing on this cycle is just how much we overshot that 50-period moving average. Last time we didn't do it as much as we did this time around. So what that's telling me is that we should expect a lot more volatility in this halving cycle going forward. Okay, so we've had a run up of a higher percentage over the 50-period moving average than previously, and as such, we've had a bigger percentage pullback than we had previously. Speaking of pullbacks, what I'd like to do is show you guys on the daily chart what I'm talking about. All right, so this is a daily chart. So currently, the low that we've just made is from the top to the most recent lows today was a 44% pullback. Now, we've seen similar pullbacks at the beginning of bull runs as we come out of a bear market. A little bit hard to see, but this one was 40%. This one was 24%, 38%, 34%, 32%, 38%, 39%. So in terms of pullbacks coming out of a bear cycle, this is one of the bigger ones, 44%. A lot of people will look at when we get above the 200-period moving average that you buy the 40% pullbacks, just buy them. So I think we saw that to a degree. If we zoom in here in this price action here, where price came back down, we saw some buying come in, it paused, but then it rolled over. Okay, so people might have had stops there, but I think a lot of long-term buys were had in this area here. And I don't necessarily think that's a bad idea, because I think, and we'll get into it a little bit more in this video, but I don't think that the time spent on this pullback, if you bought up here and you're just going to stick with that for the long haul, I don't think you're going to be underwater for very long. But that being said, keep in mind, halving's less than a year out, and that's where you get a lot of price appreciation. So this is area where you're positioning basically, so that's something to keep in mind, for the long haul, because this channel is huge, and if we play out to this trajectory, again, we're talking six figures when this halving cycle plays out to around the time period of the previous ones, and putting us approximately here, and on this chart, it's going to be right around 250,000 if we maintain that trajectory. And if you've read about stock to flow and things like that, all perfectly reasonable considering the finite nature of Bitcoin, as well as the deflationary mechanisms that are in place with these mining halving events. Okay, the next chart I want to look at, another big picture one, is the fib multiplier. So what I will point out to you guys is back here, this is the last halving cycle. You know, essentially you're going to come out of the bear market, you're going to most likely tag one of these fib multipliers and then pull back. And when we came out of the last halving cycle, we hit, this is the green line is 2.36. And then this is fib 1.2 and fib 1.3. Those are Fibonacci numbers. And the multiplier is off of the 50 period weekly moving average. So it's not uncommon to see that you'll break out and then pull back to one of these levels. A lot of times it ends up being the green 2.36 level. And when that happens, price starts to settle in. And then as you start getting closer to having, moving back up. Typically Q4 is bullish as you get toward the halving. So I actually think we'll probably see a bounce from this general area. We'll talk about more specifics in a bit, but price probably is going to see a range from here up into the blue fib 2 level and range in between there most likely. Okay, so this is big picture stuff, but again, I mean, if you look at the waves, what are we doing? We're making highs, we're pulling back, we're making highs, we're pulling back. And you want to be catching these cyclical lows, okay? And so that's what's happening right now. So not a dip to be afraid of in my mind. It's just a matter of, you know, getting, you know, pinpointing the entry points. But this stuff here that we're seeing longer term is really going to turn a large percentage profit as we creep forward into next year. All right, now I'm going to talk about the futures gap because that's really, I think, what was in play here. Now we talked about last video, if we don't hold these levels and we do come down and fill this gap, which we did expect lower, and that's what we're getting. So right now, what we're looking at is, you know, basically that first breach of the gap, and then we came back up, consolidated again. I think that's a lot of people buying the 40% dip, and then it rolled over today. I look at these other levels, these halving levels that are 50% mark of the gap levels, I should say, excuse me. These are 50% levels of the gaps. And so if you take like on the 4-hour chart, which is what we have up here, and you look at the 4-hour gaps and you draw 50% level between the gap open and close, you'll see that price tends to respect that. So we have a level here of 75.30. Now again, this will be on the futures chart, so it's going to translate into a slightly different number on the different Bitcoin exchanges. But you know, when you see the futures drop to that level, might be a spot where we get a bounce, much like we had here. Another interesting spot on the gap chart is there's actually a 4-hour gap. Now I really don't pay a lot of attention to a 4-hour gap versus if I see it on the daily. If I see the gap on the daily, that's a huge signal and acts like a big tractor beam. On a 4-hour chart, I'm looking at this. If we get into the area, then that could come into play. That currently is right around 71.85, and that's going to, you know, if we get down there, don't be surprised if we tag that level. Okay, so that being said, let's talk about some of the daily levels that are in play and how to play this. All right, so this is the weekly chart. Now, the technicals on the weekly are pretty bullish. Once with the stochastics get oversold like this, you have the potential for a pretty decent bounce. Now, obviously, I think as getting toward 9K is probably going to be the lid for a corrective bounce, but most definitely the trend is now down, and we're going to be counter trending midterm. Long-term trend up, midterm trend down. So your first bounce back up is probably going to get faded, and you could potentially probe these lows again. But as far as, you know, longer term, this is the first move up, like wave 1 or A into a move number 2, or B into a move C. We're just pulling back into the Fibonacci areas here. The 618 is 71.94, and then they also have a level which some of the traders will consider an optimal trade entry level of 0.705, and that's at 62.68. Getting down to 62.68 would be an abnormally large pullback for where we are in this cycle. Just keep that in mind. So if we do get down to those levels, that would be a pretty raging buy level. But I think you're probably going to see some support. I think you're seeing a bit of support here in the 7,800 zone because of this weekly block that we have here. If that breaks down though, I think we could see a sweep of these lows here. That means that your 7,400 buy area would be in play. And that would also play into the 618 bounce. So on the daily, that's what looks real prime for a buy. Okay, if we look at the daily chart, you know, the technicals are really oversold here too, so that also bodes pretty well for a bounce. Now, that being said, what I wanted to see today was what we call a swing failure pattern. What that means is you're going to take out the prior low, which is this red line, and then close back above that low. What that means is that that swing down would be considered a failure because it couldn't close below the prior low. And that actually is a reversal sign. So it would be a bullish indication. That didn't happen today on Coinbase. It did happen on BitMEX. Okay, so we had this broke the low and then closed above that low just barely. But on other exchanges, not quite. And on some of the blended indexes that have partial averages from different exchanges, we didn't see that. So it'd be cleaner if everybody had that type of price action. We don't see it. Again, this is that weekly block that we're looking at. But concern for me here, guys. So there's different things that are very bullish, I think, in this pullback, but also you have to keep in mind potentially bearish. Generally speaking, when Bitcoin has a nice sustained start of a bull run, it should not see two daily closes below the 200 period moving average. So we've got one, and I'm going to be keying in on what we see here on the Friday bar. If we get another one under there, then I think we have to prepare ourselves for some time, 3-4 weeks maybe, under this 200 period moving average. It'll be real key to get back above it. But that's the danger here, and you could see a lot of meandering down in these lower levels. Not that that's a bad thing. Again, we're looking at bigger picture. We're pulling back to the bullish Fibonacci zone on the weekly. But keep in mind, if this doesn't get out of here pretty quickly, we could be hanging around down in these areas for a bit. Okay, the next thing I want to show you guys, this is the delta heat map. Basically, if it's a bluish color, we consider that bullish, and if it's pink, we consider that bearish. And basically what we see here is we have a delta reading. So this measures the futures contract versus spot. We have now hit below zero, and typically that's a nice area for a bounce. But we haven't seen that, nor did we get. If you notice on these other lows that we've seen, when we get down to the zero delta reading, we've had swing failure patterns, right? Where you make a low and then you close higher. And didn't see that on this one here, okay? So, again, while there's a lot of things setting up that are bullish for a pullback, keep in mind that if we don't get a nice reaction here relatively soon, this could drop down to maybe lower to like 7,400. We do get a decent bounce of $400, $500, $600 or more, but keep in mind that we may not be clearing this 200 period moving average as we should to get a move to like back to 9K. So I think there's a bounce in here, but I'm getting less and less bullish about a quick recovery based on the fact that, compared to where we are with the 200 period moving average and just a lack of bounce here on today's candle that closed today based on this delta reading. We might be slipping into a more consolidation before a bigger move up, which I would be looking for toward end of October. If we look at the VWAP levels, again, these are monthly VWAP, volume weighted average price. So you take basically the most volume on a particular price for the month. And again, these levels you will tend to see price react to. So the next one in play is going to be down here at 73.42. Okay, that's going to be again playing into sweeping these lows here, these lows right here, and that would be a very typical thing for Bitcoin to come do. There's more professional trading going on. A lot of stops would be under there. Raid those lows, you're probably going to get a pretty reactive bounce. So that's a level I'm actually looking at as well. Okay, and last but not least, taking a look at the crypto fear and greed indicator. Actually making sense now again. So I don't know if this low here that we got at 5 was the $10,000 mark. I'm going to throw that one out. Now we're starting to make sense on these readings. We got a reading of 12, very, very bearish. So typically these low readings tend to get a bounce out of price-wise. So bullish indication on the crypto fear and greed. This is an actual actionable reading. Typically the first hook back up is going to be your green light to get long. All right, guys, so that's it. Big picture stuff. Again, this is a pullback in a very, very, very bullish uptrend. Not uncommon to get back to these levels. This is the Fib 236 multiplier. Not uncommon to get back there. So now it's just going to be a matter of where do we settle in at. We've looked at all of the parameters. I think there's, again, we have to be cautious, but Long term, looking at going forward into the next halving cycle, looking to pick up more coin to hold longer term, these levels aren't bad. Swing trading, just got to be careful. I think I like this 7,400 level a lot for a dip buy. You have to respect the fact that we're now under the 200-day period moving average. All right, guys, that's going to do it for this video. Really appreciate you guys watching. Again, if you want to check us out, head over to tradelikeagenius.com and you can join us in the room or pick up our moneymaker indicators. Other than that, I'll see you on the next video, guys. Thanks a lot. Bye-bye.
Trade Genius.